activity and, of course, political and social instability that results from it.
Let me ask you. Last time you were on here, we talked about Greece, and right now we hear they're going to be getting this bailout. They're in talks to get this bailout. What do you still think Greece is going to leave the Eurozone?
Yes. In fact, there's been no bailout. There's been no talks of a bailout. And for that matter, all of Europe is on vacation throughout August, and they owe the ECB $3.2 billion on August 20th. They haven't even started to have a talk. All that happened, and, again, the governments are in there rigging markets, buying stocks and selling gold and saying, look, we have a deal. All that happened was the Greek parliament, against the wishes of the people, agreed to negotiate further for a settlement. But there hasn't been any negotiations. All that has happened was the Troika gave Greece 8 billion euros to pay the Troika back. And since then, the IMF, which is part of the Troika, said pretty much we're not going to participate in a bailout. Now Europe's falling apart, so no one's going to want to be part of it. And no one's falling apart more than Greece. They just announced that last month, that's June. It's going to be a lot worse in July. That purchasing manager index went from like 49 to 30 in 1 month. And that retail sales are down 70%. And yes, they reopened the banks, but it's all capital controlled. They just finally reopened the stock market. It's in free fall. And, I've been saying for 2 years, the most important stock in the world is National Bank of Greece, which is essentially a quasi-nationalized entity and that encompasses all of Greece's debts. It's trading today at an all-time low. It's down about 50% since the, quote, bailout was announced. And there has not been any discussions of a bailout. And when they were talking about what might be, they're talking about a potential 86 billion euro bailout. Remember, their on-balance sheet debt is 350 billion euros. It turns out their off-balance sheet debt is equal to that amount. So they're already at 600 billion euros of debt, which is some astronomical amount of GDP. But because the Greek economy has completely collapsed since that announcement, any 86 billion number is a joke. There's a full-blown bank run, even with the capital controls. And, I don't think there's a chance that anything less than 150 billion euros would even matter. And so, no, I don't think there'll be any bailout. I wouldn't be surprised if there's a Grexit by the end of the summer, let alone by the end of the year. And there's nothing that anyone could do about it.
So what do you think they're going to do? Do you think they're going to print the drachma? Do you think they're going to turn towards Russia?
Doesn't matter. Turn towards Russia. What does that mean? First of all, Russia's as bankrupt as anyone. And Russia, by the way, is a 100% commodity nation. Is anyone looking at the price of oil? It's about to break through the lows from March. The CRB commodity index, and again, it's not just oil in Russia, they sell commodities. The CRB commodity index, as we speak, is breaking through the 2008 lows, the bottom of the most horrible financial crisis ever. We're breaking below that right now. And as I've been showing people, for weeks now, we're only within like 2 or 3% of the 40-year lows in commodity prices. I mean, that's a pretty big statement considering for 40 years we've had massive money printing that have driven up the cost of mining. That's how little demand there is and how much oversupply there is. There's nothing Russia can do to help. I mean, they're saying, Greece's going to sign a pipeline deal with Russia. First of all, there's no demand for that. The prices are collapsing. And second of all, that they wouldn't get any money from that. They would say, yeah, we agree. You can make a pipeline. But Russia's not making any pipelines and there's no deals. Greece is going to be forced probably by its own people, because I think by the end of the year, even Syriza will be out of office and there'll be someone even more anti-austerity, and they'll go to drachmas. They'll say, look, it's worth it to just write off all our debt, our 600 or 700 billion euros of debt, and start over. And the same thing is going to happen with all of the pigs and with pretty much the whole world of pigs. And we're the biggest pig of all. We just happen to have the reserve currency, so we can last a little longer than everyone else.
So them exiting, basically they're defaulting.
And they have defaulted already, right?
Yeah,
they defaulted several times. They're pretty much in default right now. I said they gave them 8 billion euros to pay themselves, but August 20th, 2 weeks from now, they owe more money, and they won't pay that either. It's no different than Puerto Rico. They're in complete default, and what they're going to do is default on all of it. I mean, it's no different than someone doing a personal bankruptcy filing. We can't pay anymore, and it's no use trying to pretend. And at least Greece has these people that were supposedly trying to bail them out, really only so that they can pay them back and so that they won't have to write down all their bonds. Remember, The bailout, what causes the big problem is all the European banks and the Troika have to write down their bonds. They're holding all the Greek debt on their books at par. All of them, the Troika, the ECB, the IMF, the German banks, the German government, they are all holding Greek debt on their books at par. And they're all holding Portuguese debt and Italian debt and Spanish debt and all these things at par. Because if they let them actually bankrupt and don't bail them out, then they have to admit that it's not worth par when they're actually defaulting on it. So that's where the whole daisy chain goes. And I wrote last week an article called The Only Difference Between Late 2008 and Today, and that's aside from the collapsing commodity prices and collapsing economic activity and exploding unemployment, et cetera, is that there's PPTs out there. They spend all day long printing money, buying stocks, buying bonds, sort of shorting gold, to try to, prevent the veneer of 2008, but it's failing. I mean, the commodity index, as I said, is breaking below the 2008 lows. Now, the average currency is down 50% in the last 4 years. The commodity currencies are in free fall. We're talking about major inflation in these countries. When you talk about the average brick, the big, strong brick currencies are down 90% in the last 4 years. I mean, it's the perfect storm of inflation of the things that we need and deflation of everything else. And it's going to continue swamping the world until we have a generational default on all this unpayable debt and all the currencies collapse and we have to start all over again.
Well, you talked about the BRICS. Is the yuan a threat to the dollar?
Well, again, when I say the BRICS are down 90%, not the yuan, because the yuan is pegged to the dollar. Of course, as I've been saying for the last 6 months, they are, of course, going to have to depeg it. Everyone else is devaluing. It's what I call the final currency war. What I predicted 2 years ago, when even people in my own world were going, oh, the dollar is going to collapse. I said, no. Just like in 2008, the dollar is going to explode higher against other currencies simply because it's a liquidity vacuum. When things are falling apart, everyone sells the illiquid currencies and buys the more liquid currency. That's it. And so what's happening is the dollar is exploding higher. The yuan, which is pegged to it, is going up with it. It kills business. It kills multinational business. The White House is complaining, and no one's economy is free falling faster now than China, including all of their export trade is collapsing. So they're going to be desperate to get away from this peg, and ultimately, in time, they will be a threat to the dollar because they own all that gold. And again, while everyone, including everyone in my own community, was saying, yes, the Chinese are going to announce they have all this gold at 20,000, I said, you can Google it, an article I wrote in May called When Will China Announce Its Massive Gold Hoard? And I said the odds of China announcing they have 20,000 tons of gold are the same as the CFTC announcing that JP Morgan is suppressing gold prices. The only thing that's going to make that happen, and they did say they increased it a little just to show, hey, we are buying something, is the reason they won't do it is because they know that it will create a collapse in the whole monetary system. Everyone will be selling currencies. There'll be a global economic cataclysm, and China's government will be caught in it, and they'll be kicked out too. So what that's going to happen is they're going to announce it when they are forced by the markets, just like the Fed is going to announce QE4 when it's forced, when commodities fall enough, currencies fall enough, when God forbid they lose control of the Dow, then they'll have to announce it, and that's gold holdings. And when they do, eventually, when the dust clears and we get past this chasm and everyone defaults on all its debt, the nation that has all the manufacturing market share in the gold is going to be the leader, and that will be the yuan. But that's not going to be, anytime soon.
So in the future, do you see them actually just pegging to gold?
Maybe, maybe not. I mean, look, the fact is they don't need to peg it to gold. They just need people to know they have the gold and to believe it. Like we've been saying for years, we have 8,133 tons. Of course we don't have it. We haven't even had an audit in 60 years, and we never will, because it's all mathematically. You do the math and you could see that we don't have it anymore. Not to mention all the admissions by people within the government over the years that we've been selling it and double counting it and all that stuff. But I wrote an article also about a year ago called Is Gold Money? Who Cares? Meaning, I don't own it because I think, well, there's going to be a gold standard. And heck, who knows if even a gold standard would be trustworthy? I mean, that would mean you have to trust the governments to, they'd say, yeah, we have gold backing our dollars you want. You have to trust them. No one's going to trust them. I own it because it's the only historical substance that is money. It defines money. Gold and silver do. And so, until we get past this fiat regime, which is destroying everything, I want to own the thing that holds its value. And in time, will the new world order, and I don't mean new world order by a handful of people deciding. I mean, when this current regime just kind of dies and we have something new, will it involve a quote gold standard? Will it involve a gold standard that's backed by the Chinese? I don't know. I really don't care. I mean, the current Chinese government are a bunch of morons. Am I to believe there's going to be some brilliant Chinese government in the future? Maybe there will be, but I really don't care. I do know that people aren't going to just accept the faith of central bank printed fiat currency after it's destroyed the world. And not just now, it's done it every time. This is just the only time it's been the entire world on a fiat standard at once. And on top of that, supplemented by these weapons of mass financial destruction, these derivatives, these PPTs, these algorithms that have allowed them to push the situation so much further and cause this much more damage. So, no, I don't know if there'll be a gold standard. There'll be something where gold will be remonetized, but I don't know if it will be the way it was in the past.
So right now we see Greece defaulting, and then, of course, we hear Puerto Rico, which is closer to home here, Commonwealth of the United States, yes. And they just missed a payment. But, of course, they're calling it a moratorium on payments. It's not really a default.
Yeah, and that's the whole point. That's the whole point with you print money, you buy the stock market, and you say, yeah, see the market, it didn't crash, so it really is a moratorium, whatever that means.
Yeah.
But no, they defaulted. They owe $72 billion. They're a freaking little tiny island. Their only business is tourism. And who goes to Puerto Rico? I think my parents went there for their honeymoon in the 60s. They have no business there, and they, like Fannie Mae, are, quote, quasi-government backed here. I mean, the U.S. government can't deny that it has a kind of a what's the word? In a kind of a debt that they are backing implicitly, or whatever. And so we're going to have, we're going to have to pay that in some way, shape, or form, the taxpayers. And what that's going to do is just going to incentivize all the other bankrupt entities from Greece on to default on their debts. And frankly, it's going to be, the same kind of race to the bottom. Who can do it first? Because we figure, well, if we do it first, maybe we'll get actually bailed out, whereas the people who try it down the road won't get anything. So yes, Puerto Rico is a perfect case in point, completely and utterly defaulted. And by the way, did anyone notice that S&P downgraded their outlook on the whole European Union yesterday? Yes. from stable to negative? I mean, stable is the biggest understatement of all time, or overstatement. But the fact is, that's what's going to happen in all of Europe. They're all going to default because none of them can pay anything. And Greece is the perfect example of how it's like it's a vicious cycle, because with each passing day that they don't get bailed out, the needs become more and more exponentially. There's no doubt in my mind that 86 billion euro number is probably up closer to 150 billion because of the damage to the Greek economy just in the past 2 or 3 weeks. I mean, they don't even have an economy right now. People are just sitting in their houses all day. So, it's just a matter of time before it all goes. Will it go by year end? Don't know. Pretty much, it would be pretty shocking to me if the next shoe doesn't drop before year end.
And while we see all this happening, we're seeing oil prices, they're, dropping again.
Yes, because they're the most oversupplied. And again, I was an oil analyst for 10 years on Wall Street. This is the most oversupplied market in the history of mankind, and it's all because of what David Stockman calls the Great Deformation, or as I wrote in my article on January 2nd, the direst prediction of all the years of money printing and the financial engineering have created massive, massive, massive oversupply of everything. We got ghost cities, we got too many copper mines and oil wells and big government and stock prices. Everything is way, 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 way over the top, and nothing more than the case of shale oil, which is the high cost oil of the world, which was financed by $500 billion of junk bonds and leveraged loans. And not to mention, heck, earlier this year, when they fell a little, all these idiots on Wall Street pumped a bunch of equity back into them. That's going to go down the drain also. And it's not just shale oil. There's plenty of high cost oil around the world that's going to go out of business. And then the low cost too. And, the more that you have all these producers that are desperate for money, the more they produce. That's why we're at record production right now as the price hits these lows from 2008. And then on top of that, we got our brilliant president who thinks he's Jimmy Carter, our Peace Prize president, picking now of all times to do his peace deal. And it's not going to make, our relations with Iran any better. Iran is going to add $1 million a barrel a day to the global supply of oil starting this fall, which is only going to make things worse. So again, I don't care if, unless we have hyperinflation or war, and don't discount those two things, I think oil is not only going to break below 40, I think it's going to break below 30, and it's going to put every country in the world pretty much out of business. And look at where their commodities are now. Look at commodity currencies. Look at the Russian ruble, the Brazilian real, the Canadian dollar, Australian dollar, Mexican peso, you name it. Anything that's related to currencies is in complete free fall, and we're just getting started.
So let me, you mentioned war. I mean, where do you see war happening? Where do you see this breaking out? I
don't know. I just know that this is what happens historically in times of extreme financial distress. Especially, no one more so than us. We have the most to lose. We have the reserve currency. We need a cause to rally around that we can send our bombs to. I'm not saying that I know what's going on. I'm saying this is what historically happens. Of course, the Middle East is the number one most likely place because, again, not only do we, does our government have the people believing that they're our enemy, but if they can somehow get a situation where oil wells blow up, it might push the price of oil up and help them out. Of course, higher oil prices isn't going to help a consumer, which is already in record debt and has record low consumer confidence. And by the way, neither will war. But this is how they think, that we need something to get us going. So I'm not saying I know what's going on in the boardroom or the C-suite, as David Stockton would call it. But this is what happens throughout history. And if I had to pick somewhere, I would say we'll pick a fight with someone in the Middle East or with Russia, our other great Satan enemy.
Okay. So let me ask you about gold now. We see gold is continually dropping.
Paper gold.
It's paper gold. And of course, everyone else that doesn't know anything about gold, they just see this, and they hear it on the corporate media. Oh, look, gold is down. I mean, how much further can the paper gold go down? I mean, even though physical is completely separate, people still see it as one and the same when they actually look at it. I mean, they don't.
They're still close enough that, they haven't completely detached yet, as they did in 2008 when you ran out of supply completely and silver premiums went to 100% and gold premiums went to 30%. You couldn't buy it. That was a complete detachment. And, to a lesser extent in 2011, when silver went to $50, we ran out of supply. And along the line here, we've lost supply many times. I mean, look what just happened in silver. The mint had to close down again, as they did last year, and they did in 2012 because of too much demand. Right now, we are seeing, and again, I'm at Miles Franklin, a bullion dealer. Business has gotten very strong for us. In fact, the lower the price has gone, the more business we've done. This is one of our best. We just had one of our best months in years. But forget Miles Franklin. We're small potatoes. Anywhere you look around the world, objectively, you're talking about record demand. Whether it's the U.S. Mint, the Shanghai Stock Exchange, Indian gold imports, even with their ridiculous 10% import tariffs, record demand. Everywhere you look at the inventories. And I'm not just talking about inventories of like bullion dealers. I'm talking about the COMEX, whose sole goal is to keep the price down, is showing record low inventories of gold. I'm talking about, I think they're down to like $380 million worth. That's it. The entire inventory of gold at the COMEX is $380 million. There's 1,000 billionaires on the planet. There's probably 100,000 entities with that kind of petty cash. That's how little gold sits on the COMEX. It's down 90% from 5 or 6 years ago, their inventory. The GLD, someone has sucked up in the last 5 years 50% of its inventory. 50%. Then you have the Shanghai Exchange, which the demand is so brisk that they and India, actually in the beginning of the year, Shanghai Exchange withdrawals were like almost the full amount of global production. That's how big demand is. And as for supply, well, I worked for the mining industry for 5 or 6 years, and no one has spoken more, no one on this planet, about the dangers of mining stocks and about peak gold and about how much this industry is imploding. And we're getting earnings numbers now, and the companies are cutting capex like they've never cut them before. If the year ended today and they had to do their reserve requirement, their reserve updates, they'd be writing off probably half of the industry's assets today. And so I fully expect that peak gold is long past. I mean, we'll never see gold where it was in the last year or two. And silver is going to be even bigger decline, because not only the primary silver miners collapsing, but remember, half of all silver in the world is byproduct of copper, lead, and zinc mines. And those things are going to go out of business because of massive oversupply. You look at the prices of copper, lead, and zinc, they're going through the floor. I think by the 12 months from now, they'll probably be below the 2008 lows, and they'll shut those mines down and never bring them back. And they'll go half of the world's silver production. And silver, there's even less inventory out there than there is gold. I mean, it's not even close because all the gold inventory, all the gold that's ever produced at least still exists. No one's going to get it. It's sitting in strong hands. But silver, it's all been consumed. There's no more than 2 billion ounces of silver above ground in the whole world. And most of it is held by people like me who are never selling it. It's that tight, and that's why they mess around with the market so much. But, we're getting close to our, hallelujah moment where there's just no more gold and silver. And we haven't even had the crisis yet.
So when do you think the paper gold and the physical gold will actually start to split?
It's clearly already splitting because the premiums, mostly on silver, have been going up, and we're having shortages. When? That's the big question. If they can't avert, that's why I say they manipulate stock price and bond prices all day long and economic data, because once the next 2008 hits, and when I say the next, it's going to be a lot worse because there's no cushion. First of all, economic activity is much worse now than it was then, and debt is much higher, and central banks have used all of their ammunition. The Fed had an $800 billion balance sheet. Now it's $4.5 trillion. They can't print any more money without creating a hyperinflation. But once that next crisis occurs, which in my mind, as I said, is here, except for these manipulated financial markets, that's when you're going to see a 2008 style response where any remaining gold and silver is swamped. And the Germans will say this time, yes, you better give us our gold back. And they'll do another save our Swiss gold. And this time the people say, yes, we want gold, but it'll be too late.
Andy, are you trying to tell me that the president and the Fed, who are telling us that we're in a recovery, we're not in a recovery?
Isn't that amazing that they still use that word? I mean, look, I call it the evil troika, the evil tripod. We have an evil troika in Europe, the evil tripod of money printing, market manipulation, and propaganda. And as far as I'm concerned, the propaganda side broke a while ago. I don't think anyone really believes there's a recovery. I mean, all the real data now, we're talking about collapsing retail sales, durable goods, construction orders, factory orders, even consumer confidence is now in free fall. Then you look at labor participation and real wages and the amount of people on entitlements and et cetera. I mean, it's almost a comedy to even purport that there's a recovery at this point. Because there's no sign of anything but a collapse anywhere. I mean, how can you have commodities almost breaking through 40-year lows and say that there's a recovery? There's no recovery. That part is dead. So what are we left with? Market manipulation and money printing. Now, the money printing only works as long as it doesn't create hyperinflation. And when the next round comes, when the Fed joins what the PBOC is doing right now, what the BOJ is doing right now, what the ECB is doing right now, then that's going to be the end of that part. And as for market manipulation, well, they still have the stock market, near its highs, although it's certainly flagging right now, but not everywhere else. Certainly not the Chinese market, which is collapsing. Certainly not a lot of the European markets. And of course, commodities and currencies are, the currency index, global currency index is not at a 2008 low. It's at an all-time low, and it's falling at free fall speed. So they've lost control of that, and obviously they've lost control of commodities. And believe me, the commodity collapse is just getting started as we break through the 2008 levels. So, that part will soon be completely broken too, and then all that will be left will be the money printing. And let's face it, the money printing in Japan is not working. I mean, they're demanding Shinzo Abe resign right now. It's not working in China because the market's falling despite the PBOC's supporting the market. All that we got left is the Fed. I mean, there's a reason why I wrote an article earlier this year called Last to Go. I said the last to go, the most manipulated markets with the most powerful tools will be paper, gold, and silver, and the Dow Jones propaganda average. Paper, gold, and silver probably go first because there's just not a lot of physical out there supporting it, but they will try their darndest to keep the Dow and, the NASDAQ up there by printing limitlessly, and they may have to hyperinflate to do it. Eventually they will do that, but that's all that's left because they're losing that whole tripod very, very quickly.
All right. For the last question, it's two parts. Last time you were on, I asked you about the Fed increasing interest rates. Do you still think that they're actually going to increase interest rates, or is they're just out there telling everyone they're going to do it?
Right. Well, again, the most important thing people need to realize, it's immaterial. I mean, it's, again, this is a perfect product. You manipulate markets enough, you every time someone says, well, they may raise rates, you smash paper gold, and then you get the idiot mainstream media and stuff to write, well, yeah, see, look, gold's down because they're going to raise rates. First of all, rates have been down for 7 or 8 years now. It's zero, not just low. The historical average is 5 or 6% on the 10-year, and we're at 2% right now. You couldn't even get up 0.25% from here without destroying the finances of the American government, let alone everything else. And talk about raising rates when the economy of the whole world is collapsing, raising rates when the dollar is soaring and commodities are collapsing. It's just such an idiotic, for anyone to even believe that would even be a consideration is so ridiculous. But yes, what they're trying to do is trying to misdirect you. This is kind of what Peter Schiff talks about. He says misdirect. They want you to think they're going to do it so that people, especially if they see a manipulated stock market going up, say, see, yeah, they are in control. There is a recovery. And, that's why they're talking about it. But then they never do it. And they can't do it. They had a guy out today, one of their guys saying, yeah, it might be appropriate to do it in September. All right, well, let me see. People remember Janet Yellen said in December they were going to do it in March and then June. Now it's just September. By September, we won't even remember the economy as it was today. It'll be so bad. But even if they did, there's no, what you're really asking is, will gold go down further? That's what you're saying. If they raise rates, it has no impact on gold. All that matters is the manipulation. Can they keep shorting paper gold into a market where there's no physical gold? Someone asked me that yesterday. I said, at this point, it's so manipulated, it really doesn't matter whether interest rates are 0, 1,000%, or negative 1,000%. It has nothing to do with the price of gold. There's never, by the way, been a correlation between gold and interest rates. Oh, and by the way, when gold hit its all-time high in real terms in 1980, interest rates were soaring. It doesn't matter. Just like the dollar index, the dollar index just means the dollar versus the euro. There's been no correlation between the dollar index and gold, and why should there be? As I said before, if a bomb blew up Paris today, an atomic bomb, forget Paris, the entire Europe were destroyed by an atomic bomb today, okay? And obviously the U.S. dollar index would triple, quadruple. It would go from 98 to 500 to 5,000. Would it be bad for gold? Who freaking cares? I mean, there may not even be a euro a year from now. Does that mean that's bad for gold? It means hundreds of millions of people who have just watched their currency hyperinflate are going to be buying real money. So again, it's all propaganda. If the Fed raises rates, and what they want to do is what they're so desperate to do, they want to be able to bull the stock market to highs with some more of their algorithms and secret money printing and, putting out some fake economic data along the way, so that they can say, yes, we're raising it from 1/4 point to 3/8 of a point. Look, we raised it. That means there's a recovery. That's what they want to do. I don't think they'll even get a chance to do that, not the way things are going right now.
Yeah, I think if they raise it, I think things will fall apart even faster.
And of course, yes, if they raise it, all that does is make things worse. It's not, that would be the worst. I can tell you with 100% certainty, if they did that, the dollar index would go through the roof, which means all these destroyed currencies would get destroyed even more. And we're talking about that's when war starts to break out.
So do you think I asked you this last time, this is the second part. Do you think that we will make it into this fall without some type of collapse type of scenario?
Well, there's a lot of collapse going on right now. I'm looking at the oil price and commodities on my screen and currencies on my screen and Puerto Rico and Greece and the Chinese stock market and a whole bunch of other stuff. But, are you asking, will 2008 part 2, which in my mind will be 2008, squared, or whatever, much worse than can be imagined? Maybe the Shemitah's right. Maybe it'll happen in September. I don't know. Certainly the way things are shaping up economically and market-wise, it's hard to believe we can get through the fall without something cataclysmic happening. But look, they're trap rats. They'll fight as hard as they can. I think they'll lose. I think the forces of reality, of economic Mother Nature, are way too powerful for them right now, which is why they are losing so many battles.
Andy Hoffman, thank you for being on here. I really appreciate it. Thank you for all the information. Thanks a lot.
It's a pleasure.